Have you ever imagined a life where you don't have to worry about working for money, where you can wake up daily and do whatever you please without financial stress? It might seem like a far-fetched dream, but it's possible.
Investments in just common stocks, and you'd figured a way so that you would have staying power if there were any market dip. I mean, you'd obviously have obtained extraordinary returns. I pointed out in my investing lifetime.
Investing in the stock market. First things first, let's take a look at recent market trends and volatility. You might have heard of GameStop, the video game retailer that stormed Wall Street earlier in 2021. A group of Redditors, led by the infamous Wall Street Bets, drove the stock price up by more than 1,500%, causing chaos in the market. While this might seem like a fun and exciting way to make money, you should know that the stock market can be unpredictable and volatile. Robert Kiyosaki, author of Rich Dad, Poor Dad, recommends a long-term strategy for investing in the stock market. It means focusing on companies with solid fundamentals and a track record of consistent growth. Investing in these companies and holding on to your shares for the long haul can build passive income and accumulate wealth over time. Speaking of passive income, let's discuss the benefits of investing in stocks. Unlike active income, which requires you to trade your time for money, passive income allows you to make money while you sleep. When you invest in stocks, you become a shareholder in a company and can earn dividends as the company profits. In addition, as the stock price goes up, so does the value of your investment. So, who are some successful stock investors we can learn from? Warren Buffett is a household name for investing, and for good reason. His investment strategy involves buying undervalued stocks and companies with solid fundamentals and holding on to them for the long term. Jack Bogle, the founder of the Vanguard Group, is another successful investor who advocates for low-cost index funds to diversify your portfolio and minimize risk. It brings us to the difference between active and passive investing. Active investing involves trying to beat the market by buying and selling stocks based on market trends and predictions. It requires a lot of time, knowledge, and resources, and can be risky if you need to know what you're doing.
Because it forces me to think. I get creative. I have to educate myself. I have to talk to rich guys. Hey, how'd you do this? How'd you do that?
Passive investing, on the other hand, involves investing in low-cost index funds that track the market as a whole. It is a more hands-off approach that can still lead to long-term gains. Now, let's dive into some practical tips for investing in the stock market for beginners. First and foremost, diversification is critical. It means investing in a variety of companies across different industries and sectors. It helps minimize risk and protects you from market fluctuations. Another strategy is dollar cost averaging, which involves investing a fixed amount of money at regular intervals regardless of market conditions. It allows you to buy more shares when prices are low and fewer when prices are high. Finally, investing in low-cost index funds is a great way to get started in the stock market. These funds track the market as a whole and are managed by professionals, making them a low-risk and low-cost option for beginners. They offer instant diversification, so you don't have to worry about picking individual stocks. Investing in the stock market can be a great way to build passive income and accumulate wealth over time. You can minimize risk and maximize gains by focusing on a long-term strategy, investing in solid companies, and diversifying your portfolio. Good luck and happy investing! Investing in real estate. As you may know, the real estate market has recently been on a roller coaster ride. Housing prices have steadily risen, and mortgage rates are at historic lows. It has created a perfect storm for investors looking to cash in on the rental demand. So, why should you consider real estate investing? Let me tell you what Robert Kiyosaki has to say about it. He says real estate investing provides 3 significant benefits: passive income, tax advantages, and long-term wealth accumulation.
The more debt we use, the less tax we pay. That is why I love real estate. I can use debt, pay no taxes, make a lot of money. So that's really what I teach. I don't recommend it, but for those of you who understand what's called an infinite return, it's the best way to get rich.
1. Passive income. One of the significant benefits of real estate investing is the potential to earn passive income. With real estate investments, you can generate consistent and reliable cash flow through rental income. It means you can make money without working for it actively. Once you have acquired a property, you can sit back and collect rent payments regularly, providing a steady income stream. Unlike other investments that require constant monitoring and management, real estate investments allow you to earn passive income without much effort. As you continue to build your real estate portfolio, your passive income can grow even more significantly, providing you with long-term financial stability and freedom. 2. Tax advantages. Real estate investing offers numerous benefits, including tax advantages that can save you substantial money in the long run. As a real estate investor, several tax deductions are available to you, which can lower your taxable income. These deductions include property depreciation, which is the decrease in value of your property over time, mortgage interest, the interest you pay on your mortgage loan, and property taxes, which you pay to the local government for the upkeep of the property. These deductions can significantly reduce your tax bill and increase your cash flow. Real estate investment can also provide passive income, making it an excellent long-term investment strategy. 3. Long-term wealth accumulation. Real estate is an appreciating asset, meaning its value increases over time. By investing in real estate, you have the potential to build long-term wealth and financial security for you and your family. But don't just take my word for it. Some of the most successful investors in the world, including Donald Trump and Sam Zell, have built their fortunes on real estate investments, and their strategies align with Kiyosaki's recommendations. What are some of the different types of real estate investments you can consider? Several options include rental properties, REITs, and crowdfunding platforms. Rental properties are the most well-known type of real estate investment. By purchasing a property and renting it out to tenants, you can generate rental income and build equity in the property over time. REITs, or real estate investment trusts, are another option. These companies own and operate income-producing real estate, such as apartment buildings, office complexes, and shopping centers. By investing in a REIT, you can own a small piece of these properties and receive a portion of the rental income they generate.
That has never, ever happened before in our lifetimes. And Robert's laughing right now. He's like, oh, that's too optimistic. But truly, I've been talking about this country would become a renter nation. I've been talking about that for 10 years. It's happening right now. Also, I do not think real estate is overpriced today. I think cap rates will compress to 50% of what they are today.
And finally, crowdfunding platforms allow investors to pool their money together to invest in real estate projects. These platforms provide access to various investment opportunities, from fix and flip properties to commercial real estate developments. If you're considering real estate investing, there are a few things to remember. 1. Researching local markets to identify areas with high rental demand and favorable economic conditions is essential. 2. You'll need to calculate the cash flow of potential investments to ensure they're profitable. 3. You'll need to understand financing options, including mortgages, private loans, and hard money lenders. Real estate investing can be incredibly lucrative and rewarding. With the potential for passive income, tax advantages, and long-term wealth accumulation, it's no wonder so many successful investors have made real estate a cornerstone of their portfolios. So, what are you waiting for? Start exploring the world of real estate investing today. Combining stock market and real estate investments. As discussed earlier, diversifying your investments across multiple asset classes is critical to achieving financial freedom. Investing in the stock market and real estate can benefit from the unique advantages of each asset class while minimizing the risks of putting all your eggs in one basket. According to Kiyosaki, balancing your assets in the stock market and real estate is crucial to achieving long-term financial success. One example of a successful investor who has combined stock market and real estate investments is Robert Shiller. A Nobel Prize-winning economist, Shiller is well known for his work on housing bubbles and the stock market. He is also a successful real estate investor, having purchased several properties in New Haven, Connecticut, where he teaches at Yale University. Another successful investor who has combined these two investments is David Swensen, the Chief Investment Officer at Yale University. Swensen is known for successfully managing Yale's endowment fund, consistently outperforming the market. Swensen also invests in real estate and has been quoted as saying that real estate is one of the best asset classes for a long-term investor. So, how can you combine stock market and real estate investments to optimize returns and achieve financial freedom? One way is to use leverage. By borrowing money to invest in real estate, you can increase your returns and build equity over time. Similarly, using margin to invest in the stock market can amplify your returns, but it's essential to be cautious and only use margin when you're confident in your investments. Another way to optimize returns is to use tax strategies. The stock market and real estate offer tax advantages, such as deductions for mortgage interest and capital gains. Understanding these tax strategies and working with a financial advisor can minimize tax liability and maximize returns. Asset allocation is also
To invest. One of my favorite books that just came out with is called Fake Money, Fake Teachers, Fake Assets. I use debt to invest. But to be able to do that, to go to here, to get rich, to do that, you've really got to have a lot of financial education.
crucial to balance your investments in the stock market and real estate. By diversifying across different types of stocks and real estate investments, you can minimize your risks and maximize your returns. For example, you might invest in a mix of stocks such as large cap, small cap, and international stocks, as well as different types of real estate investments such as rental properties and REITs. Understanding each asset class's risks and benefits is essential. Real estate can be more time-consuming and require more upfront capital, while the stock market can be more volatile and require a longer-term strategy. Consulting with a financial advisor can help you create a balanced portfolio that aligns with your goals and risk tolerance. In summary, combining stock market and real estate investments can be a powerful strategy for achieving financial freedom. You can optimize your returns and minimize risks using leverage, tax strategies, and asset allocation. As with any investment strategy, it's essential to research, consult a financial advisor, and set realistic goals for your long-term financial success. Well, folks, we've covered a lot of ground today, and I hope you're as excited about these two investment options as I am. To recap, Robert Kiyosaki recommends investing in the stock market and real estate to achieve financial independence and never have to work again. But let me tell you, it's not just about throwing your money into these investments and hoping for the best. A long-term strategy is vital, which means being patient, disciplined, and consistent with your assets. You may see results later, but if you stick with it, you'll be well on your way to financial freedom. Diversification is also crucial. Don't put all your eggs in one basket. Spread your investments across different asset classes and industries to minimize risk and maximize returns. And let's recognize risk management. While investing always carries some risk level, assessing your risk tolerance and making informed decisions based on your financial goals and circumstances is essential. Investing in the stock market and real estate can be daunting, especially for beginners. That's why it's always a good idea to seek professional advice if unsure. A financial advisor can help you understand your options and make the right decisions. But don't let fear hold you back. With the right mindset, anyone can start investing and working towards financial goals. Even small steps can lead to significant results. And if you're considering investing, I suggest Interactive Brokers as a reliable option. Their user-friendly website lets you swiftly open an account and trade in various investment opportunities. To initiate trading with Interactive Brokers, click the link in the description. I encourage you to take action today, whether opening a brokerage account or researching real estate opportunities in your area. There's no time to start investing in your future. And if you're looking for more inspiration or guidance, check out the end screen video for additional resources and information. Thank you so much for watching, and I hope you found this video helpful. Remember to like, share, and subscribe. And please share your experiences and strategies in the comments section below. Let's continue this conversation and support each other toward financial independence.